Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for coming by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time. The stream's about integrating Bookmap order flow tools with auction market theory using the volume profile in the intraday developing time frame. This is about the business trading using structured trades that you can reverse engineer, make your own. And it's really about the business of trading. The Trader Lab is a group of like-minded traders who come together to leverage their collective experience. It doesn't matter how long you've been trading. What does matter is if you've been kind of making the rounds, jumping from chat to chat, guru to guru, influence to influencer, and you keep waking up in the same place. I call that Trader Groundhog Day. Then you may want to extract what you can from that experience and ask yourself, is it realistic to expect something different? Now, the question, of course, is what is different? I invite you all to come to Trader Lab. Not that it's the holy grail, that it's going to be the answer. What it is a realistic approach to the business. This is a gaming business. We cannot get the things we need in the sense of certainty or confirmation. It doesn't exist in this business. So the idea of the Trader Lab is to help traders understand the business they're attempting to be in and how to change not the reality of the business, but change your beliefs about what this business is. And then potentially, if you can change your beliefs to be in alignment with the actual business, which is a gaming process and not a video game, and certainly not anything that's certain. But if you can develop a process that has a statistical edge over a large distribution of interactions with the opposite side, if you will, or the other participants, if you actually have an edge, you will extract dollars from the other participants. And of course, you have to develop the discipline and deal with the mental obstacles of actually operating in a random environment. And this is very counterintuitive, and I underline the term intuitive because we're pressing back against primal wiring that's looking for certainty. Well, what happens if you're not in an environment where there is certainty? How about if there's only uncertainty? Then you have to learn to get past your fear. And we're all fearful because we're wired for it. The difference is, can you manage the fear and separate those emotional triggers from the job? And that, in my opinion, is the biggest obstacle. I believe anyone who comes to Trader Lab can actually learn how to trade if they do the work. But the obstacle is going to be to actually execute the trades when the trades show up. And if that's your experience, no matter what process you're employing, then you might want to visit Trader Lab so you can learn more about yourself. Because in the end, this is really about you. It's not about me or anybody else, because we're all different. The thing that's not different is the obstacles we face because of our primal wiring. That's something you might want to dig deeper into. It's the last thing most developing traders think about, because for most of them, it's all about finding the holy grail, certainty, and the next setup. I can assure you, you don't need the setups. You need to understand yourself, how the market works, why it does what it does, and how to get in alignment. And then still, you're going to be fearful. So how do you overcome these things? That's what Trader Lab is for. And there's a link in the bottom of YouTube. If you want to visit the lab, there's no cost. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room, but if we get there, we'll do it. Now, let's talk about the market. Now, what I like to do always, because this is about the business and of trading and market mechanics, is start at the beginning of the day and help you understand how the market operates and how it transitions from one condition to the other. And our job as traders is to attempt to get in alignment with the market. And of course, part of being in a market that is changing is we won't know until hindsight that instead of zigging, maybe we should be zagging. That is just the nature of the animal. And we tend, our job is to try to get in alignment, but what happens, happens. You know, it's part of the thrill. 1 second, please. I have to make an adjustment here on levels that you're seeing right now in Bookmap. Those HVNs, LVNs, they are current. and I need to remove those. So we can look at the condition of the market as it develops. Okay. By the way, if you have questions, post them. I'll do my best. I can't see your questions immediately. One moment. Again. Okay. All right. Here we go. So let's go take a look here. Yes, I am based in the U.S. I'm in Chicago. So this is the condition of the market. Now let's look at what happened yesterday. Yesterday we had selling, and the market failed to take out the previous day's low, Friday's low. And that was a target. Now, the fact it's a target doesn't mean anything. It just is what it is. So this is yesterday's low, and there's stops under there. This is the current low, by the way. And then we have the next low, which is the week low, which is the one I was looking for yesterday. Now, when I say looking for it, it's just a target. Doesn't mean anything. Don't get the idea that anybody can predict anything. I'm going to tell you I am clueless. Now, clueless doesn't mean ignorant. The idea of being clueless, what I have done is I found, and I've been doing this 46 years, so I used to think the market's going to do such and such. Well, I've changed that with market might do such and such, and it might do something else, and I don't know, so I'm clueless. The idea of clueless is actually to protect myself from becoming myopic, like it's going to. How many times do you come in with an opinion, and based on what? Because what we are doing is we're attempting to align with the participants. We do not move the market. It's not us. We're like the little fleas on the butt of an elephant, or maybe the back would be better, but that's us. So we don't move the market. We have no power or sustainability in the market. So you have to know where you are in the financial food chain. So we can't move the market, but our job is to align. So that's the basis of what we are attempting to do. So we know that we have a week low from Friday that was poorly auctioned, and all this is in yesterday's stream because we talked about it quite a bit. And then we have yesterday's high was actually the RTH all-time high, and then we have from yesterday's ETH, if you will, the ETH high, all-time high. So we have an all-time high there. We had yesterday's high, which is the RTH all-time high. Kind of confusing, isn't it? ETH high, the overnight volume point of control. This is the highest volume or retail price in the ETH. So this is the current value. And this is yesterday's high. So we're opening out of balance, out of range. So it's a gap. Lovely. Now let's go a little further. Let's go the other way. Yesterday, the retail price was here. So let's think about what a retail price is. Now, when I'm referring to these terms like retail, I'm talking about shopping. The market is an auction, so it's a price discovery mechanism. And the way the market tends to work is wherever the high volume is where buyers and sellers are willing to do business. It's the same thing when you go to your store, you buy your can of mustard or bottle of mustard. Wherever that retail price is, buyers and sellers agree. Well, the idea of the marketplace is to try to figure out what's too high, what's too low, and what's fair. And what might be a fair price at one point can become unfair. So it's kind of like you go to the store, you're all willing to pay a certain price for your mustard. Let's say it's $1 a bottle. And then there's another store where now it's 75 cents. Are you going to go and pay $1? No, that price now is too high, and you leave the store, you shop elsewhere. The market kind of works the same way, and it does it in all these fractals or rotations. So when you guys think time frames, really kind of the same thing, I'm just taking a look at the market here. If we're getting to our targets, we are. How nice. So this morning, so what are we looking for? We're opening. Now, the way this works is the market is long. That means we are above yesterday's range outside of something called value. Value is where 70% of the volume takes place. So based on the current RTH open, here's what we know. ETH high, and whatever's above is above. Retail price from the ETH, yesterday's high, all-time high, overnight mid, value area high. So for me, initially, I'm looking at this and I'm saying as well, looks like we found too low yesterday. We couldn't take out the week low that was under Friday's low. We got short covering. We had a nice wick, so it looked to me like we were going to go higher today. So we had what's called responsive selling yesterday to the higher open, got our sellers, and then we squeezed those guys. And this morning we open higher, we take those sellers out, and then helmet. So let's take a look. RTH open. So, and this morning it's trading. What are you going to do? Let me explain. So my first trade is I'm looking for longs. So here's microstructure. Now, what I want you guys to understand, hold on, is I see we're getting our target from yesterday. Isn't it funny how that works? Hold on. 1 second. Just have to. Okay. This is called VPOC migration. Now, when we are opening outside of range, outside of value in a gap, we have to look at what the possibilities are. The market is currently out of balance, and balance means we are away from the high volume price, and we're outside of value, and it's a gap, so it's unbalanced. So what tends to happen is, if we open up here, we have the possibility to come here, check the retail price in the ETH, and then come here, because there's over a 90% probability we get to the ETH high or low. That's fun. And we also have over a 98% probability we take out the first hour's high or low, a 79% probability we get here. So for me, in this configuration, I'm looking for longs on the open. Now, this right here is called VPOC migration. So initially, when the market opens, this is suggesting it's going higher. So I have a choice. I can buy it, going for this, or I can try to get it to come under here to take out these buyers and then look for the long. And I have the gap, and getting to yesterday's high or low has a 67% probability and 67% probability of the previous high. So I'm thinking, well, we can fill the gap. And then I have the ETH mid. Let me give you another statistic, 68% probability. Past performance is not indicative of future results. You got to vet these things, right? And we are leaning to the upside at the open. So for me, it was longs. But I'm looking for this. So what do you do? Great question. So I got resting liquidity up here. I get VPOC migration. So this is under certain conditions, this would be a long for me. I did not take the long because of the gap. Because typically, unless there's some event, it isn't gap and run. It's going to be gap, squeeze, new longs, which could have been me, and then counter rotation. And this is called the opening swing low. I'm just going to mark it. Now, is it really the opening swing low? No, it's not. What it is where the stops are going to be for those who jump in. And they may get paid. This is not about right, wrong. I just have a trade plan. I'm not even saying it's a good plan. It's just the one I use. So this is VPOC migration. So I call these variable high volume nodes. And what it is when the market opens, the RTH open, this is where the volume comes in. So it's 8:30 Central Time. Volume starts at 0. So right here I have volume. That yellow line's developing volume point of control. If I come back here and I don't take it out, it can act as support. I'm going to label it. So that's my first retail price. Remember, shopping. Traders are shoppers. You know, you heard the thing, buy low, sell high. Well, when you go to the store, if it's on sale, what are you doing? You're buying low and you're taking it home. You're not selling it. But since we don't take S&Ps home with us, we're basically buying them and then selling them at a higher price if we can, right? Or selling them at a higher price and buying them back lower. So VPOC migration, what is it saying? Let's follow the language. It is sort of like in Oz, follow the yellow brick road. That's kind of what I call it. So I'm following the yellow brick road and what the market is doing. Now we're only open 30 seconds. This is not actionable unless you have a specific plan for this. It's called VPOC migration. And just as a reminder to everyone, this is not where you start. This is the last place anybody should trade because you have to have all your skills refined. You have to have a vetted trade plan. And if you can't trade profitably with the other trades I've shared with you, this will not work for you. So this is resistance. Why is it resistance? Because, why? This is where order flow comes in. I have two pieces. I have this resting liquidity. I take it, I come back here, I get VPOC migration. This suggests higher. Where's my next resting liquidity? It's here. Isn't that interesting? VPOC migration. Going to the moon, Alice. Ever think about it? Oh, it's going up, up, up. Well, I'm looking at this, of course, and I'm thinking, well, maybe you should have got, right? Does anybody not think that? Maybe I should have. You know what that is? Two things. One, it's hide or little me, me too. The voice in your head that sits on your shoulder that is 100% right in hindsight. Maybe I should have got long here. Well, my plan says no, because this is the opening swing low. What happens to the guys in this leg? Well, unless we just blast, and go here, which we could. If I don't get through this, which I will not know until hindsight, I got the stops under these buyers. Is that making some sense? Now, I'm not saying I know what's going to happen because nobody does. I would tell you that my experience has taught me not to respond to FOMO. And when the voice in my head says, you should have got long, which is the lunatic. Remember, I talk about the psychology. I don't respond to that either. I just sort of, I go, yeah, right. And maybe the lunatic is right. I mean, if we knew it was going to do this, then we might do something about it. But since we don't know, how can we react? So that's what a trade plan is for. When it comes back here, this is support right here. However, what else is here? Stops. So I have nothing to do. So I'm looking for this and this. These are my first targets. So when we come down and I see the stops come out, then I'm looking for, and where's my target? Overnight mid. So I fill the gap and now I'm looking to get long because I'm thinking, well, I got these guys, they're under the bus, and now I've got shorts. That's my fuel. In other words, the market goes up to go down. The market goes down to go up. It rotates over itself. So when it goes up here, I got sell stops. When it comes down here, I got buy stops. Logical. So now fill the gap and ETH mid. And then I have this also. So I know I can test into the range. And if I find my buyers, I want to get long. So my first trade to get long, as I mentioned to you. So, and this is very important because I can test into the range. And ETH mid, by the way, has about a 68% probability. So I trade with statistics. And for me, and you have to vet everything for yourself, it creates an edge. It doesn't predict anything. It gives me areas to observe. This did yesterday's high. But this is based on the last auction, which is the ETH mid. This is from yesterday. This is today. So this is the most current information. Overnight volume point of control, retail price from the ETH. If this is too high, I can come down and check the next levels here and here and wherever, and then rotate. So that's my first trade. It's called mean reversion, underlining the term mean, because it is. How do you pick an outside edge? Well, good luck with that. Don't we all wish we could? So this is going to be my first trade that I took. I'm not saying it's a good trade. I'm just saying it's a trade. Now, this right here is VPOC migration. This is not good. It says this is too high. I think I took it here. I have to go look. Yeah, I did. I'm trying to remember. And I'm trying to come across. This is my scale ahead of this. And then I am looking for this. And why would I look for it? It's a good question. I ask myself, why? There's almost a 98% probability I take out either the ETH high or low. So why wouldn't I be going for that, you say? I'm going to say, yeah, I don't know. Why would I? Why wouldn't I? Well, I would because I'm thinking that this was just to get these longs out. And now these guys that are short become the buyers, the squeeze. But what was too high? It was here. So my job, if I get long, and I have this probability in here for my long, is to scale ahead of this. So this was my first trade. I get VPOC migration. So right here, right there, I'm going, gotcha now. I'm risk neutral, and I'm looking for this. Instead, I get that. This is a problem. Let me get this out of here. It's a problem because, what is it? Let's look at the language of the market. This is too high, isn't it? This was a retail price. Think of it like shopping. Remember, this is a store. And up here, they said, I'm not paying that. I'm leaving. And they leave. But down here, we find too low. And so what do? We either come here and break, or we come here and test, and then out the top, or say Liquidity. So what do I know now? Let's follow what we know. Not what will happen, because that part, not in the game. Sorry, guys. We can't predict. We don't know. You know, come to Trader Lab, clue me in, clue everybody else in. But in the meantime, this is what we know. Too high, too low. Remember, drop down. If that's too high, break low, do the Acapulco cliff dive. Too low, test here. Scale. Then out the top, high probability, 98%. Shift up, going to the moon. Liquidity, the book thickens up. And I'm seeing this and I'm going, you ever do that? What does it mean? Uh-oh. Break low. Trouble. Taken out. Now what? Now, this is too high. So I got too high. No clue. Break under here, which was too low. Now, this might be too high. Let's watch. Buy sweep. Now, there's a couple little things to think about here. I'm going to take you into something a little more deeper. And guys, I'm only showing you ideas. These are not mechanical. There is no indicator. There's only behavior. If you think about indicators, what do? They measure price or some derivative. Okay. Well, I don't use them because I can do the same thing in my brain and I can recognize it here. And by the time an indicator, which is lagging, figures out something, it's going to do what? Get involved over here? That's not where I want to trade. So I scale before here. So you understand, why would I scale here? Because the price was too high. What I don't know is this too low? Well, if it's too low and I clear this, I go north. If it works, if it breaks the other way, I go south. Now this is a buy sweep. What often happens with sweeps, and I say often, that means maybe and sometimes, and it's all random, is if I get a sweep, I can anticipate a counter rotation. So I see this sweep, but I'm not thrilled. But my plan says scale ahead of this. So I give it usually a couple ticks. And you'll see where it actually tagged it to the tick. This is meaningful. And again, VPOC migration, I see my sellers, what I'm anticipating, or I think better word is hoping, because that's what you got, hope, is that the buyers that are here, that created that, are here and absorb this seller so we can continue. Watch. And what happens here is, so we have the buyers above the sellers. The buyers are here, the buyers are there. This is like the last shot for the buyers, because the buyers are here. They are absorbing the sellers. The sellers are here. So I know I got sellers there. I know I've got buyers here. I know my retail price is there. I got sellers, buyers. That's what I know. That's all I know. I don't know anything else. And when I break here, this is where the buyers were, and this is my retail price. If I break under this, there's trouble. I get down to my value area high. Now, there's a couple possibilities. I come here and I reverse back inside, or it gets coyote ugly, as they say. And if it gets ugly, then my next targets are here, value area low, ETH low. Remember, 98% probability we take either ETH high, low, and based on this behavior, not so much as far as the longs. Here, and then value, this 15 is a target. This is from yesterday's auction. Stops under yesterday's low target, and we have one more area right here. So we have stops still down in here. Actually, no, here. Friday's low. I mean, we can go lower, but this is to clean everybody out. Yesterday's low, Friday's low. And this was the target for yesterday if we would have got rolling. But we only got this far. That's called trading. It's random. So now let's take a look. So now I'm falling out. This level now here is too high. Remember, too low, too high. I'm not paying that. Really? No, I'm out of here. Break under here, too high. Now what? Here's the condition. Here's the possibilities. Out here, back there, and out the top, not likely, or since and this is the really where we got to stay out of if we're going to have a shot at the upside. So this was really kind of it. But I already know that the market is not behaving. What has it not done? We checked the retail price from the ETH, which we did right on the open. If it's too high, I'm not paying that. Really? No. All right. Then this is my next area. So here's what can happen. I can rotate up to here, or I can break down and continue south. Let's see what it does. We're having an interesting conversation in Trader Lab about this, because what was support, this, and there's a little more in here. Some of this is a bit advanced, guys, so just stay calm. I break low, so now this is too high. Let's remember that. I get liquidity comes in here. I break down to value area high, which is really right here, okay? And overnight mid. So what else do I know? I'm inside yesterday's range, and this is like a big deal. So I rotate up. Now right here, my teeth are chattering. I'm saying, should I be taking a long here? I mean, I'm asking myself the question. Doesn't mean I take one, because I'm in the range. So right here, I come up and I'm testing. Let's come back to the structure. So right here, it's, what's up, Charlie? I have absorption here. My buyers are there. That's the absorption. Buyers are here. I come up. Now I come up, and, I have to tell you, when I'm doing this, there's most of the time, I don't know what's going on. But what do I know? I know that this is too high. This level here is too high right here. That's what I know. Now, if I cross over it, it means I go there. If I can't get over it, hasta la vista. What else do I know? My liquidity is pressing, and I get a sweep. And in the Trader Lab, a sweep is an important item. So I get my sweep and I break. Once I break here, I can put my short back on. Or put a short on, I should say. Now, what do I know? Let's come back to what we know. So that was a short for me. Now, I don't call trades. I post a lot in the Trader Lab, but, the thing about Trader Lab is it's not replicating what anybody does. It's kind of finding what speaks to you. And as most traders will tell you, this is really a business of patience and not over trading. It's a business of risk reward. It's all those things. And I think most of us know that. But a lot of us developing traders approach this like a video game. The more you trade, the more risk you're taking, whether you know it or not. So think about this. If you trade 2 or 3 times a day, you're taking pretty much, whatever your risk is, but you're only exposing yourself a couple times. And if you're trading for larger swings, that risk reward takes care of the stops we all take. But when you go down in time frame, everything you're putting the trade on, you're taking pretty much the same risk, and your probability of success is going to go down. That probably is not going to be sustainable. Now, maybe you're the exception, but you have to ask yourself why you're in this business. What are you trying to accomplish? Anyway, so this sets up your short. There's your sweep. This is key. Right here is too high, so you know that. Now, this might not be your trade. It's my trade, might not be your trade. So, boom. And then you're looking to come all the way down somewhere. And we have this as over 98% probability. So as long as I'm outside, I'm inside the range, I'm inside value area, it sets up value area low, which is there, and this, just so you know. So anything for me now is just shorts. So VPOC migration. Now, this is the report. We had a report come out, as you guys know, 9 a.m. It's a biggie. And where's my location? Where'd this come from? The longs all the way back earlier. VPOC migration. Is this now the new retail price? So what can it do? Break up, break down. Me, not so much on the long, very much on the short. Let's watch the locations again. Let me draw this out for you. You notice these little drawings I do? What I'm doing with them is, this is where I had buyers, and that created that up move. When I break below this, and this is a short here, and I come back to what was too low, the concept, support, resistance, too high. New retail price. What comes in the book here? What is this setup? A short? There's more. And there's others. These are more advanced concepts, but you can learn them. Don't forget what's important. I'm inside the range. And I'm inside of value. That means south of the border, potentially, headed this way. So it's just shorts. VPOC migration. See if this isn't familiar. And I'm going to come up and look at questions in a little bit. So this is the new retail price. This is my resistance. VPOC migration. We are now directional. So for me, it's just shorts, and I try to hold for targets. And of course, like all of us, it can be frustrating because you give MFE back. So next target was here. And then I have another target. These are all on the price map, around 15. It's all posted in Trader Lab. Break low, come back. This is an additional area to observe. And then I'm going for stops, which are down below. All this is posted in Trader Lab. So we're going for this And what is this? This is a liquidity trigger. It's something advanced again. I'm going to show it to you just so you could see it. Now, I know I'm covering a lot of stuff. And guys, just let's be realistic. To do this takes a lot of work to understand it. If I'm not using indicators, what I'm using is behavior, because all your indicator is doing, remember, is just following a derivative of price. Well, I got the same thing. I'm following price, but I'm using order flow. And I'm understanding the behavior of the order book. The buyers were here. There's the icebergs. When I break below, isn't this too high? Maybe. Let's put a little box around it, just in case. I have no idea. Resistance. So this can be an advanced trigger. This can be your entry. Here we have a sell sweep. This is big. Now our targets were there and there. And this was, remember, this was the target for yesterday. Life in the fast lane. What are you going to do? Watch. Now, remember we saw the buy sweep, wherever that was. I forget where, somewhere above. I showed it to you. This is resistance. Break, resistance. Break, resistance. Break, sweep, targets. This is it for me. Over, finito. Thanks for playing. You get a coupon to the buffet. Now watch the change in behavior. Where are we? Well, first of all, we have a sweep and we've gotten our stops out. So the trade is over. Now, and I haven't seen any of this. So the trade's over. And if you're trailing, which is another discussion, I won't go into it now, but that's something you as an individual have to vet. And it has to do with what are you trading? Are you trading this? What are you trading? By the way, there's a trade here. I think I missed it. I got to show it to you. It's a structured trade. Now, I share 60 PDFs of structured trades for you guys to reverse engineer, and it's ideas for you to research. They're not plug and play. And this idea of plug and play, I'm just going to say, is a waste of your time. Just doesn't work. Otherwise, we'd all plug and play, right? 9:30 Central Time, my time, is something called the IB, the initial bounce. That's the first hour's high or low. Coming back to your statistics, there is a 98% probability we take out either the first hour's high or low. Well, I don't know about you, but I'm kind of thinking since we're inside a range and all of that, and we're doing the Acapulco cliff dive, I want to get short because my stops are below me. So this is called the IB continuation trade. Now, this is just one of many. And in the 60, and I'll show you the 60 PDFs that I've shared, but they're not plug and play. It just doesn't work that way. If it was, we'd all do it. How many years have you spent looking at plug and play? Now, if you're profitable with plug and play, come to Trader Lab, clue us in. But in the meantime, if you're just trying to duplicate somebody else, everybody has winning trades, by the way. Every indicator has winning trades. No indicator has winning trades. But I mean by that, I mean, if you didn't have an indicator, you'd still have winning trades. That's what gambling is all about. So the idea of winning trades is you can maybe have an opportunity for more winning trades if you only interact when you have a statistical edge that you've vetted, so you know where it is. This is called the IB continuation trade. I'm going to show it to you. So at 9:30 Central Time, this is the first hour's low. It's called the IB. So I call it the IB continuation trade in a directional market. Now, here's the little bit of the rub. Now, I'm already short, but this could be the following. This can be an initiative trade, and the reason you might take it is because there's sell stops under yesterday's low, and we have value area low open. So you have initially a potential short to there, and then potentially here. So this is a good short in there. There, out, and out the bottom, right? So let's look at the IB continuation short. And then I'm probably going to be somewhat caught up, I think. because I forgot this. So right here is a short. Let's look at it. How do you get into this thing? Well, first of all, if you're in TraderLab, you know where your trades will show up. So that's the first thing. So let's try to take a look at this. Too high. Chop, chop. Let me just show you a little something more advanced. I'm going to go down in fractal. So this is too high. Chop, chop. Sellers, too high. Sellers in the microstructure. Trigger. High volume is, let me show it to you, and I'm taking you into something called fractals. So here is high volume. If it's too high, I leave it. Now I have volume in here. If it's too high, I leave it. I come back and check. Checking this is the same as checking that, except I'm going down in time frame. And I don't use the clock, so there's no time frame. It's fractal. In other words, auctions. I'm not paying that. Yeah, but it's on sale. Retail. Sellers. Trigger. Where is it too high? Here. And the sellers took over here. There. There. These are all potential shorts if it's in your plan. Again, subject to. And now we come to the IB. What do we see in the IB? Chop, chop, buyers. And where were my buyers? Here. What happened to these guys? Under the proverbial steamroller. Right there. IB continuation short. Next target is here. Resistance is here. Potential add or whatever is here, or you're out. You know, it's just a matter of whatever. And then you have others. This is the next target. And you have the sweep. The short is over. Now let's take a look at what's happening here. Notice where we come. And you know, I haven't seen this, so I'm clueless. Notice where we come. What do I know about this? What do I know about this? This is an outside edge. Resistance is here. Break low, trigger. Support now is here. Now, this is not necessarily a trade you would want to take. It's up to your plan. You could be done and you could be in your Barca lounger. I want you to see how liquidity and behavior, how it works. Notice the liquidity is in the book. Notice this liquidity. We paused, we broke below. This becomes resistance. You see? Resistance. And down we go. We come up, they pull. Now here I get a buy sweep. So right here it's either going to continue down or come up to the next level. Is this still in the book? Yeah, it is. And I get my icebergs here. Where's my support now? It's there. See it? You guys have questions. I got to turn some levels on from Investor RT, and then I will be with you. How you guys doing? Hope you're getting something out of this. This is TraderLab, and what this is really what I'm sharing with you is something called trading in fractals or structured trading. It's about the business of trading. Now, most of us are all about activity and feeding, getting the dopamine and, all that wonderful stuff. The reality of the business is that's not really what the business is about. Business is really about edge. And I find that if I take a lot of trades, my broker sends me a gift basket, but it doesn't really accomplish anything for me. It's very good for my, it increases my overhead and cost of production, but it doesn't do anything for me. So I had to adjust. You guys think of time frames, call it anything you want. But I had to change what I did because I don't want to trade a lot. And what does that mean? It means that the more I expose myself to risk, statistically, the more losses I'll take. Isn't that logical? So I trade swings. So I'm looking to trade rotations. I want to get paid. Remember where our support is? It's here. And resistance is there. Now, there's no trade. So for me, my day could be very well done. I have no problem being finito. We have FOMC tomorrow. And don't forget, see the sweep? What does the market do with these sweeps? Potentially reverses. We have a sweep here, a buy sweep. What might it do? Reverse. What does it do? It doesn't do it. Did you think there was something that was automatic? But what do I know up here? I know my sellers are here because we got below the buyers that were here. So that's my resistance. I can trade this. You can trade it if you have a plan for it. Now, do you want to trade from 14 to 10? Me, I'm not interested because that's about what my risk is. My risk runs around 3 points, 2.5, 3. So I can't get short here. By the time I'm conscious, there's my trigger. The best I got here, and this is actually a structured trigger. You can learn this. Let me show it to you. Remember, resistance, no clue. Going to the moon. Notice what happens here. This is order flow. This is a separate thing. This is where order flow and a high tier tool like Bookmap comes in. Why is this here? Let's guess together. We're going to guess because nobody can say I know in trading. The best you have is maybe. Maybe these sellers, these icebergs, this 600, all these guys here who are selling here. Right here, I have a buyer, and as far as I know, it's going to the moon. I break low. Right here, I have a trigger. This is a trigger, and this comes in. That skews the book. Now, what we don't know is, are we only coming back here? There's my sell sweeps. There's my sell sweep. What does that suggest? Potential to come here. I'm just saying. Doesn't mean it will. But why is this material? Let me show you the trigger. Now, this is only good in hindsight, of course. So when your teeth are chattering, at least me, that's what I do. I'm going, right? Isn't that what you do? Is it? Well, we're uncertain, aren't we? And all you guys, me included, want certainty because we're wired to avoid risk. But how do you get paid in this business? You got to take risk. Huh. Isn't that a problem? Yeah, it is. So what do I know? This is material. This comes in. That's the trigger. The change in behavior is the trigger. Now, if you would have got short here, you got to have your stop above here, at least. If you get short here, your entry is here. If you got short there, your stop has to be above here. Or here, you get short here, your stop's got to be above there. This is your scale. I'm just showing you structure. I'm not saying anybody should be doing this. Resistance, support. Resistance, sweep, potential back here, or continue lower. Let's see what it does. Sweep. So, what do we have? Support, resistance. Now, you want to watch the order flow now to see, do we get adds pressing or do we get stacking under here to push? You see? And I can't tell you. It's not my job. But what my job is to only take trades that qualify based on my plan, to get risk neutral, and then put my helmet on. So let's watch the behavior. So me, I don't trade this, but I am sharing with you is how to read it. So if you understand how to read the market, then you would know not what will happen. You would know, if you're in TraderLab, where it might happen. What is the significance of the location? And then you'd be stalking triggers, and you'd have to have a trade management process, how to get risk neutral. What are the qualifications to get from your entry to your target? Is there enough range to cover the risk from your entry to get risk neutral, and then you manage your trade? Are we going lower, or are we done? And now we're just going to counter rotate. And I should say, be in balance, two-sided trade. I can't answer the question for you. I can tell you that if I did take a short here, I'd be risk neutral. My stop would be out here, and I'd be working on my crochet. Questions? And thanks for your patience. This is a Trader Lab. You can learn this, but it's not come and hang out for 20 minutes and walk away with a business. It's come to Trader Lab, drop anchor, roll your sleeves up. How we doing? How we doing in YouTube? Guys, please hit the like if you find this useful. There's no cost for this, so the only way Bookmap knows that there's interest is if you throw a like in there and watch the streams. You know, it's only by Bookmap's good graces that this is available at no cost. Trader Lab's been around, I guess it's going on about 4 years, and there's never been any cost for it. So I think that's a good thing. Most of you guys have probably made the rounds and paid all kinds of dollars, and you've got to ask yourself, if you're not a profitable trader, what did you get from it? Because here's the thing, everything works randomly. Even here, everything works randomly. The difference is there's no plug and play in trading. There are times when trades, of course, work because they have edge under certain conditions, if indeed they do. A lot of things we see have no edge. They're just random. You have to keep metrics, and you have to understand the business you're in order to solve for the business that you want to be in. You just don't go somewhere and buy a book or something, and now you have an ATM in the basement. I'm going to suggest that's naive, though we're drawn to it because that's what we want. We want it so bad, right? To be financially independent, have our own business. Of course. Why wouldn't you? So we look for the shortcuts. We look for the sure thing. And I'm going to tell you, there is no sure thing, and there is no shortcut. I think we all would have taken it. I'm doing this 46 years. There is no shortcut. And unfortunately for me, when I started, there was no information. We didn't have PCs. We didn't have an internet. So you bought a book or you went to a seminar. And I have to tell you, I read all the books. I've given most of them away, except for some, souvenirs. And as far as going to the seminars, I never got anything out of it except the hotel bill, airfare, and nothing. Yet, marketers have been appealing to us since, and some people call it snake oil. That's been around since snakes. And what's so interesting, at least for me, if I go around on YouTube or cruise around, I see the same stuff repackaged. There's nothing new in trading. And I don't. There's AI. There's the new thing. We're all going to run for AI. I'm not. And maybe someday AI will actually get an edge over us. Is it not? Is that going to happen? Maybe. But in the meantime, by the way, this is important. This is a big deal. Statistically speaking, and I have to thank one of our members in Trader Lab, Rod, for doing some data mining. By the way, the Trader Lab's a community of like-minded traders. It is about the business. And statistically, if I can find it, by the time I find it, where is it? Hold on. There's about an 86% probability that the market will continue lower after this event. I'm trying to find here. There's about an 86% probability it continues lower. I don't have the statistic in front of me at the moment. Rod, maybe you can hop into Trader Lab, and I think it's maybe a 6-point potential or so, 5-6 points on this event. And of course, you guys have to know where the trade would fail. But this is a advanced structured process in TraderLab right here. So you're watching it in real time. So Rod, does anybody have that stat? You want to toss it into TraderLab? How are we doing in YouTube? Please give a like if you're visiting. Support the TraderLab. Keeps it available at no cost. Oh, thanks, Furs. 67% probability, and past performance not indicative of future results. 67% probability. Let me just see. Not sure what I'm looking at here. What is the range typically after this event, guys? That should be, I have it in my stats and I can't find it at the moment. I have to go digging, and I'd rather not do that at the moment. We also have the 12 to 1 stat that will be coming up. That's another one that is useful. So let's see what this is. So VPOC migration. Now remember, the way this can work, we are looking for potential test of this low, not a recommendation. If we rotate up, it sets up mean reversion to come back here. So if we come outside and we know what was too high, and we have this still in the book, so we want to watch this liquidity. And the idea of this is to continue lower. And again, not a recommendation, who knows? Are you guys with me? Anybody have that stat, by the way? How about a like if you're visiting in YouTube? So the idea of this is to theoretically take this low out, not a recommendation. It can do anything. We have an outside edge up here. So the way to think about this is too high in a microstructure. There it is. So we're watching this trade. This is a TraderLab process, okay? And I came up with not the stats, but the behavior many years ago from my research. And it was really baffling because, you start observing things. And I was kind of a research, let's just say spent years doing research because I've done the same things you did. I grew up on indicators and they were new. So they were all really exciting. Early on, I shared an office with George Lane. He created stochastics. So I saw oscillators. And back then there was no day trading. It was trend following. And for me, short-term trading was swing trading in the S&P, 2 to 3 day swings. And I built systems. So I was really in a whole different business. So, but I observed phenomena and I learned market profile in, I think it was 1985 or 86, somewhere in there, and I could not trade with it. I thought it was a great idea that I'd use my indicators and the market profile, and I'd really have the best of all worlds. Well, what I didn't understand at the time, what happens with random inputs in a random environment. It's garbage. And I didn't know it was garbage because I always had winning trades. And you guys have winning trades. So you think it's just more winning trades, of course. Well, what about the trades you take that have random winners that don't have an edge, which means executing that trade is a loser, but you still do it? So the other part of this is, how do you measure whether you actually have a trade with an edge? If you have random inputs, there's no way to measure it because you can't replicate it. Most of us have multiple inputs and we're kind of throwing the spaghetti against the wall looking for certainty. Well, if I have more of this, I'll have more certainty. Well, it's actually the opposite. Less equals more. Because with less inputs, you can create more measurability. And if you can't measure it, you just have garbage. Because then what? Then you're gambling. I always say if you're going to gamble, go to a casino, get the cocktails and a ticket to the buffet. If you want to be in the business, then you need to be looking at this. And again, this is just an opinion. It might not be right for you. You need to look at this as a gaming business, same as the casinos operate. They only play games with an edge. They pay the gamblers. We pay, the other side. They still, for some reason, in spite of paying the gamblers, still can give you the cocktails and the ticket to the buffet, in spite of paying the gamblers. Well, every business has overhead and costs of production. So the question becomes, are you trading with an edge or are you just gambling? And the gamblers win. But the house extracts the dollars from the gamblers over time. So you have to decide which side of the table to sit on. And most of us are just looking for dopamine fixes and, being right and all this. If you're in the business, it's really much more about being very selective where you put risk on. And for me, I'm just talking again about me, I'm not interested in activity. I'm interested in sustainability. And when I do put a trade on, getting paid. So the range, called risk reward. So trading something like this, here to here, I'm not saying that's a trade anybody ought to take, but I am sharing market mechanics. How does the market work? This is important here because this suggests the possibility of going lower. So how do you operate? Notice the sweep. What does the sweep suggest? Rotation. So now we need to come back and start thinking about where's our outside edges. The outside edges are out here and out here. And it doesn't mean anything. The fact that this is here, clueless. So in your trade plan, if you put a trade on, like in here, this really is an outside edge. You can put this trade on anywhere you want, but where does the trade fail? Isn't it out here? If it comes out here, I can tell you, and it's not a recommendation, I'd be looking to get short to come back here. It's called mean reversion. The primary trade that I believe developing traders need to master is rotational reversion trading. Reversion really is outside in trading, not inside out. It's outside in. So if it comes out here, you're trying to come here. This is the mean. This is the highest volume for the day so far. So if we come out, you're looking for this. If we come out here, you're looking for that. And since the perception of the direction of the market might be down, then it's only shorts. And I'm not saying you take a short or you don't take longs. That's your business. We have a sweep here. That's what suggests the counter rotation. The trend is down. Do you feel lucky, as Dirty Harry used to say? Or do you only take shorts? VPOC migration outside of the IB suggests south of the border. This is a structured trade in the Trader Lab. How you manage the trade, where you enter, that's your business. I hope you're getting something from this. This is the Trader Lab. You can learn this. Not saying you should or you would, but up to you. So and thanks to Trader Lab for posting this. If the volume point of control shifts outside the IB for 3 points minimum, there's a 67% probability to make a new high or low of day for the remaining of the RTH session, depending on the direction. Well, 67% probability we take this out. So, not a recommendation. This is what the Trader Lab is about. The Trader Lab is an advanced trading methodology. Now, let me clear. I always have to say, advanced, it must be complicated. This is the simplest thing on the planet. Because if you're a shopper, you go to the store, you already know how to trade. The difference is, in the store, the prices don't change much. They put something on sale. That's an auction to attract buyers. If the price gets too high, you won't pay it. In our business, if the price is too high, you won't pay it. And it changes intraday, and it's actually working in the rotations. In the store, it just doesn't change much. So, But here, it's real time. So all these rotations are actually auctions. So that's too high. This is the new price. And probabilities are we're going to test this low and maybe exceed it. Don't know. Where's our stops? Down here. We might get down here or not. If you take this trade, what is your job? To get risk neutral. So the worst that happens is you scratch. That requires a minimum 2-lock configuration. This is all part of the process I've shared in TraderLab. And the idea, again, is not that you do what I do. I can't do what you do, and I don't think you would want to do what I do. You have to find what you relate to. This is what the 60 PDFs look like. These are structured trades, and they're only ideas. It's something that you can research. These are elements of things that I shared many years ago. Just find what speaks to you and dig into it. Be able to understand how it works and why it does it. It doesn't mean any trade will work. This is mean reversion right here. There's the mean. You see it? These are trades I actually took. There's an egg. Anyway. But the idea, and a lot of these are put together, pick one you like. Now, I always suggest in TraderLab that traders start with something called mean reversion. Mean reversion is rotational trading. Because if you don't understand triggers, trade management, and market mechanics, then you're just going to be all over the place, and you have to build out a plan. When I sat on the trade desk with other traders and I mentored and coached a lot of traders over the years, I was very fortunate to do that. I also managed funds, as you guys probably know, for many years. I always found that traders had really very similar, developing traders. We all have the same problems, me too. And that is this FOMO and overtrading. And then if you get in the hole, you're trying to make it back. And the fact of the matter is that has nothing to do with this business. That's all the psychological aspects of it. So you will not understand yourself until you come into this business, because the let's just say the quote rules that work in the outside world don't work here. This is like you landed on a different planet, and you have to really follow a different path in the trading business. So if you're in the trading business, there's no certainty. And our primal wiring is always pushing back against our intention. So, and the primal wiring is much stronger than your conscious state. I intend not to make mistakes. I intend not to bail out, yet we still do it. That's because of the strength. One moment, please, guys. One moment, please, guys. I have to take about a 3-minute break. I'll be right back. Remember, follow the yellow brick road. Don't go away. Be right back. Actually, I'm back. Sorry about that, guys. So this is a structured trade, and you can see it's following a process. And again, you have to vet everything for yourself. Now we have this as a possibility and this target down here. Not a trade recommendation. These are statistically based targets. What are we seeing? Let's talk fractals for a moment. This is the current retail price. And remember, when this shifted down, it suggested a move lower to test this current low. If we get under here, then I have stops sitting under this low, and I have this as the highest volume or retail price last time we were down here. Now, I don't know where it's going. It's not my job. I hope this is making some sense. Are you guys getting something from this? I hope it's not confusing. Mind blowing. That's a good name, mind blowing. Should you be trading the ES instead of the NQ as a developing trader? If it was me, yes. That's up to you. I wouldn't trade the NQ because it's a thin market. It's too fast and volatile. If you can't be profitable, in my opinion, in the ES, you have no shot in the NQ. NQ is more advanced. I used to be a high volume NQ trader, 100 trades a day, that kind of thing. So I kind of familiar with that animal. But I focus on the ES because it's about, you can trade any market you want, but you're stacking the deck against yourself. That's more gambling, in my opinion. You really got to have your stuff together. So come to Trader Lab, learn the ES. The ES, you can be a little more intentional, and you're not going to get skidded. There's enough depth in the market that most of the time you're going to get filled on your stops. I remember when I was trading the NQ, I get my stop would get taken, and they'd call me in an hour when they could find my order. Of course, this is back when we had the floor. So because you get skidded, and how do you manage risk? So you have more volatility, and part of that's because of the depth of the market. Here, look, you've got 100 contracts. If you look at your NQ depth of market, you might have 20, 12. By the time you get filled, if you have a market order in that book, those passive orders are gone. You're going to have to, you'll be in the queue, and when they eventually get to you, you'll get filled depending where the other orders are. So to me, not a good plan. Just me. But I would say no. Hope that answers your question. Now, here's a question. You get stopped out, wider stop, mean more risk. Any other ideas besides widen your stops? Yeah, Fairfax. Come to Trader Lab, learn how to trigger, how to manage risk. It's not about wider stops unless you're threading a needle. I don't know what your process is, so you can get ideas in Trader Lab, but as far as I can tell you, it's not about wider stops. It's really about triggering structures and locations. Because for me, when I put a trade on, my stop has to be where the trade fails, not because I don't want to lose. Or I don't want to lose, but it has nothing to do with the business, and not wanting to lose. If I'm following my plan, I know where I should enter, and I know where my stop would go. If I get in wherever it was over here or something, my stop still has to be out here. If I take this trade, I know that, I know I can come up here. If I take a trade anywhere and it comes back and takes me out, it doesn't mean for me, and I'm not saying this is, anything other than what I might do. I might go, oh, my location is not so good. By the way, I got a sweep, counter rotation. A sweep, counter rotation. If I come up here and I get a buy sweep and I get taken out of my short, let's just say I do, I'm not done unless it violates structure. Because then remember what I said a while ago. If it comes out here, I'm already stalking a short to come here and to come out the bottom. Not a recommendation, because if it just keeps motoring on up, I have another location up here to come back here to come out the bottom. So I have there to there to there, boom. I have there to there to there. Boom. That's what I got. That's all I got. So I'm only on shorts unless something dramatically changes. And then it's just location, location. Think real estate, location. The idea of the auction is it gives us locations. And then when it comes there, it's not mechanical. It's structural and behavioral. That's why you notice this is a low volume node. What is that? Outside edge. I'm not paying that. And where's my retail price? It's there. So what happened up here is the buyers went, you got to be kidding. I'm not paying that. And they left the store. And now we're back at a retail price. If this is too low and you threw a couple in the shopping cart, now we come back to retail. We don't trade at retail. But then what? If we come up, then we can come back. That's called mean reversion. Remember, the primary trade to learn initially is mean reversion. Hope that, anyway, that's answering a lot in one. Hope that makes some sense. So let's see what it does. So the short is here to there, and then this is setting up continuation lower. And remember, it can come out and rotate. This is mean reversion, underlining the term mean. So that's what you got. Are you guys with me? Hope you're getting something from this. By the way, if you find this interesting and you're interested in the business of trading, there's a link in the bottom of YouTube. You guys can take advantage of that. There's no cost. Come to the Bookmap Discard Trader Lab community. Trader Lab, by the way, is a group of like-minded traders that have come together to leverage their collective experience. It actually looks like this. There's a lot going on in here. Statistics. Thanks, Rod, for doing that data mining. Research, structured trades, mutual support, psychological aspects of trading. I post through the day when I can. You can see there's a lot happening in here. So you guys are all welcome. There's also a library of webinars. And Ned, thanks for curating this. You would start with the primer. It's just a high-level overview. It talks about the business of trading. It's got about 34,000 views, something like that. Also, this one's pretty good. Stop gambling, start winning. Most of us are gamblers and we don't know it. We think we call ourselves traders, but we're really gamblers. So how do you know if you're a gambler? Well, I think the results usually represent what gambling is, because that means you don't have a plan or an edge. But that's not complicated. If you're not a profitable trader, then you don't have an edge. Or even if you have an edge and you can't execute it, then what do you have? You have the problem we all have. So and let's talk about this very quickly. What about this? Just remember, this is what the Trader Lab looks like. Library of webinars, and I want to point out there's also a document section. Okay, the 60 structured trades PDFs that I showed you. There's not 60 structured trades, but it's 60 PDFs of behaviors. You know, a lot of stuff here, not to mention the Trader Lab community. Our senior trader has over 50 years. I've got 46, and there's the full range. It doesn't matter how long you've been trading. What does matter is that you're serious and that you want to make this into a business and potential sustainable career. If you're here just, if you're in the business for fun, there's loads of chats that'll help you with that, and, internet gurus and all those guys. They call them influencers. And of course, how do the influencers generate their income? It's from the clickbait. Think about it. I'm sure, and there's good educators out there. I'm not saying there isn't. But I'm going to say you have to use your discretion and do your homework. And no matter where you go, trading isn't for everybody, because it's going to test you beyond what you can imagine. You have never been tested like what this business will test you. And the reason it'll test you beyond your imagination is you've never been in an environment where every moment you're in risk. And your primal wiring is pushing back and telling you in a very strong way to avoid risk. So the way you avoid risk is to look for certainty, right? And confirmation. If that language is in your vocabulary mentally, you already are becoming familiar with the obstacle. If you're always saying, I should have got in here, or this thing goes out there, and whatever it does, and you're doing the I shoulda. There is no I shoulda. The I shoulda should be, I should have followed my plan. That's all you shoulda. The rest is random. You cannot predict anything. Zero. And you may not accept that, and that's okay. If you believe you can find certainty, that belief is based on a defective process, in my opinion. So most of us go on the looking for the holy grail, right? Certainty. How about you're in an environment where there is no certainty? then maybe you should put your energy and try to solve for something else. Just a thought. What do you think? Tom, good question. Trader Lab, by the way, Niall, the Trader Lab, there's a link in the bottom of YouTube, and you can use that link, and you can visit Trader Lab. There's no cost for it. You do have to confirm your Discord email, and that's with Discord, not with us. You will not be spammed or any of that jazz. None of that happens. But we do keep the spam out. So that's why anybody who comes to Trader Lab just needs to verify their Discord. So you'll get a little, I guess, confirmation code, that kind of a thing. So that's pretty cool. As far as the question I'm getting, LVN versus VWAP, there's no answer to that. It could be either or any, none of them. It can be this, out here to here. It can be out here or anywhere, or none of the above. Here's what I know. I know this is where my sellers were. Here's what else I know. Let's talk about what we know about this. I know there's stops over this swing. So if I come up into here, and it's only an area, and I pick the stops, and I see absorption, and then I have a trigger, this is where I'm trying to go. Okay? Notice what happened here. I had a sweep here, reversion, reversion. Now it's either up, back. So for me, if I'm going to take a trade in here, if I wasn't already short, then I'd be out. I can do anything. I can trade this. I can sell this. And where's my support? It's right there. Here, let's put a little box around this thing. And this is structured. So let's just look at this. I call this structured trading because what I'm doing is I'm trying to help traders understand what is going on here. Sweep, going to zero, reversal. Now, what happened here? Now we can open this up and we want to try to figure out what's going on. We don't know what's going on. Sellers are there, sellers are there, sellers are there, buyers are here. How do I know? Well, I got the sweep. Now, I can get a sweep and it can keep going, right? But when I see the sweep, I'm then anticipating, not predicting, the big difference, anticipating a counter rotation. Here's what I know. I know my sellers are here. Why? Because I went lower. Buyers are here. I went lower. What happens here? Buying icebergs, sell stops, sellers going down. What happens here? My buyers get above my sellers, but my sellers are here. Just watch, think of the logic. I pull back. Now, what is right here? High volume is right there. So let's think of this as your convenience store down the street. Shoppers are here. Too high, too low, retail, and either we're going to do that or that. Once I do this, it suggests higher. Resistance. VPOC migration. Support is here. Sweep. See? So now, no precision. There's a sweep. So I have a sweep here, which says potentially up. I have this, which says counter rotation. A sweep up, resistance. This, let's just follow it. Break, trigger, sweep, up, sellers. So shorts, break, VPOC migration, suggesting lower, support, sweep, counter rotation, resistance is up here. Remember the potential trades. These aren't recommendations, outside in. or, squeeze everybody out. And it could do it either or neither. Whatever it does, it does. So let's take a look. And let's go back to our potential locations. There. So this area is a potential location for mean reversion. If it keeps pushing through, then we might be coming out in here. So we'll see. These are not trade recommendations. It's just maybe. Maybe it'll do this. Maybe it'll do that. Maybe it won't do anything. This is still trading. So let's see if we get behavior. Remember, there's stops sitting here. So what the market can do is it can often, what it does, in fact, let me get this thing straightened out over here. Draw a little box here just in case we come outside. So this is out here, but this is the area. This area here is the area of interest to observe. And guys, do not take any trades based on what you hear in the stream. Part of this, at least for me, is anticipating behavior. And then basically you have a process or rules, call it, that you might follow. Outside edges out here. Stops are over the swing. And when we come out here, if we do, we want to watch the behavior. And this would be reversion. So it would be the idea of this, if anything sets up over here, would be to come back here and then down here. And whatever happens, happens. So let's just watch. I've got only 2 minutes left. Okay, we have resting liquidity here. We have an outside edge. This is an area to observe. So now we're just going to be hanging out and we're going to watch it. I've only got about 1 minute left. Please give a like if you're visiting in YouTube. This is not a trade recommendation. This is an area of interest. This is the outside edge and it's out here. And the market can pop through these because these are outside edges of swings. And then if you see the absorption and you have a trigger and you have a vetted plan, the idea would be to come back here. So let's see what it does. Try to hang in here for another minute. Please give a like if you're visiting in YouTube. Hope you're getting something out of this. Okay, let's watch. Remember, area, location, location. Liquidity resting here. You want to watch the order flow now. Unfortunately, I'm out of time, so you guys can watch this on your own. This is a key level. Please give a like on the way out if you want more information or you want to download those 60 PDFs and review the library of webinars. Use the link in the bottom of YouTube. There is no cost to visit the Trader Lab. Appreciate you visiting me today. Look forward to seeing you guys tomorrow. We have FOMC, so wear a helmet and trade safe. And thanks so much for visiting the Trader Lab. Look forward to seeing you tomorrow. Take care now.